2015 opened with the stock market suffering a case of jitters after crude oil prices plunged 50%. In early March, strong jobs data made investors nervous about whether the Fed might hike rates as early as June, much sooner than expected. While fear of the Fed's first rate hike in 7 years dogged investors throughout the first 3 quarters of 2015, stocks nonetheless trended higher on steadily improving U.S. economic data. In fact, in July, the Institute of Supply Management's Purchasing Managers Index of Non-Manufacturing Activity hit an all-time high of 60.3, which the ISM said corresponds to a 5% increase in real GDP. But the springtime market peaks did not last. The Greek debt crisis sent stocks worldwide tumbling after a vote by the Greeks not to accept terms of a bailout proposed by the European Union. While the Greeks accepted terms of a bailout by mid-July, a Greek debt solution still awaits a final ratification. On August 11th, China devalued its currency. China's move was an attempt to keep its economy growing at the amazing 7% rate, which the Chinese had sustained for years. While the world's second largest economy was still expanding, growth came in at the slowest rate seen in 25 years. Fears that less robust growth in China would cause a global slowdown helped trigger a flash crash on August 24th, when the Dow Jones Industrial Average plunged 1,000 points immediately after opening. But by the end of the day, those losses were cut in half. But the Standard & Poor's 500 suffered its first correction, a drop of more than 10% in more than 6 years. At its bottom, the S&P 500 fell by 13.4% from its May 2015 all-time high. Stocks rallied in the days leading up to the Federal Reserve's September 17th meeting. The Fed's postponement of the long-awaited rate hike set off another stock market sell-off, and the slump in stock prices continued into the end of September.